Have you ever gone through this painful situation before? You carefully draw your support line, you place your resistance line perfectly, everything looks clean, everything looks ready, and then you wait patiently for the breakout. You stare at the chart, watching the candles getting tighter, feeling the pressure building, waiting for that one explosive move, and finally, boom. Price blasts straight through resistance. The breakout happens, momentum explodes. Candles start flying upward, and in that exact moment, your adrenaline kicks in. You instantly jump into the trade thinking, this is it. This thing is about to go to the moon. You're convinced you just caught the beginning of a massive move. So you sit back, maybe you'll even grab some popcorn. You keep staring at the chart, expecting non-stop profit candles to keep printing. But then, out of absolutely nowhere, everything changes. Price suddenly slows down. Then it starts dipping. Then dipping more. And before you even realize what's happening, the market completely reverses against you. Now you're staring at the screen in total disbelief. Your excitement disappears instantly. Confusion kicks in. Your brain starts panicking. And then the painful truth hits you. Your portfolio just took a hit. Sound familiar? Yeah, almost every trader has experienced this exact nightmare at some point. So if this has happened to you before, don't worry, you are definitely not alone. But here's the good news. There is actually a secret behind avoiding this exact situation. A hidden detail most traders completely ignore before entering breakout trades. And in this video, I'm going to show it to you step by step. Because once you understand this concept, once you finally see what's really happening behind these state breakouts, you will never look at breakout trading the same way again. Now, before you can actually master breakout trading, there's one extremely important question we need to answer first. What exactly is a breakout? Because if you don't fully understand this concept, you will constantly enter bad trades at the worst possible moments. And trust me, this is where most beginner traders completely mess up. So look at the chart carefully. A breakout starts when you establish two major levels on your chart, your support level and your resistance level. These are critical price zones where the market keeps reacting over and over again. Price hits resistance, gets rejected, falls back down. Then price hits support, gets rejected again, and bounces back up over and over and over again. The market keeps testing these levels, but it cannot break through them. And what this creates is balance, consolidation, compression. It's like the market is building pressure inside a box. You literally feel the tension building candle by candle. But then everything changes. At some point, price finally gains enough momentum to break through one of those key levels. Either price explodes above resistance or it completely crashes below support. And when that breakout finally happens, the move is usually fast, aggressive, explosive. Momentum suddenly floods into the market. And this is the exact moment traders are waiting for. Because that breakout can signal a massive shift in market direction. But here's the real challenge. How do you actually trade that breakout successfully without getting trapped by fake moves, without entering too early or too late? Well, stay locked in because we're about to go much deeper into how to capitalize on these powerful breakout moves the right way. When a breakout finally happens, price doesn't just move slowly, it soars. It explodes with momentum. Candles start expanding fast, volume starts flooding into the market. And this creates one of the most powerful entry opportunities a trader can find. Right at the exact moment price smashes through resistance or violently breaks below support. That is the moment breakout traders wait for. But now comes the real challenge. How do we consistently find these setups before the breakout actually happens? How do we spot the pressure building before the explosion? Because if you can identify the setup early, you can position yourself before the market makes its massive move. And this is where most traders fail. They enter too late. They chase the candle after the breakout already happened, and then they get trapped. But the key to solving this problem lies in recognizing breakout patterns. These patterns act like warning signals. They reveal when the market is compressing, when momentum is building, when buyers or sellers are slowly taking control behind the scenes. And once you learn how to recognize these breakout formations correctly, You can start identifying high probability breakout opportunities before the market explodes. That means better entries, better timing, and much bigger profit potential. So in the rest of this video, we're going to break down these breakout patterns step by step in detail. You're going to learn exactly what to look for on the chart, exactly how to identify these setups with confidence, and exactly how professional traders position themselves before the breakout even happens. I'm sure most of you have seen these patterns before. But when it comes to trading breakouts, there are several major patterns you absolutely need to keep in your mind at all times. The wedge, the flag, the rectangle, the triangle, and the pennant. These are some of the most important breakout formations traders watch every single day, because every one of these patterns can signal that a breakout is getting ready to happen. Pressure starts building, the market starts compressing, momentum starts loading behind the scenes, and eventually the explosion comes. But here is where most traders completely mess everything up. They become obsessed with trying to find the perfect textbook pattern. They look at those clean examples online, those perfect triangles, those perfect flags, those perfect wedges, and then they expect the real market to look exactly the same. And because of that, they miss trade after trade after trade. Because the reality is, the market almost never forms perfect patterns. Real price action is messy, candles are uneven, breakouts are emotional. The market does not care about textbook shapes for you. So instead of obsessing over finding a perfect looking pattern, your real focus should be somewhere else. You should focus on identifying the key support and resistance levels that create the pattern. That is the important part. That is where the real signal comes from. Not the perfect appearance of the candles, not some beautiful textbook screenshot. The real clue is the battle happening around support and resistance, because those levels reveal where pressure is building and where a breakout is most likely preparing to happen. And once you finally understand this, your ability to spot breakout opportunities becomes completely different. Now let's be completely honest for a second. It actually does not matter which specific breakout pattern you find on the chart. Seriously, you do not need to memorize every single pattern name like you're studying for some trading exam. You don't need to obsess over whether it's a wedge, a pennant, a flag, or a rectangle, because the real secret behind all breakout patterns is much simpler than most people think. Every single breakout pattern shares one critical element, price consolidation. That's it. That is the core principle you absolutely need to understand. Every breakout setup happens because price starts moving between two important levels, support and resistance. The market gets trapped inside a range, price bounces off support, then rejects resistance, then comes back down again over and over and over. The market starts compressing, pressure starts building, and eventually that pressure explodes into a breakout. That is what really matters, not the fancy pattern name, not the perfect textbook shape. The consolidation is the real signal. For example, when we look at price action forming multiple key support and resistance points, something important starts happening. The more times price respects those levels, the stronger the setup becomes. Every rejection adds more confirmation, every bounce adds more pressure. And in this situation, once we identify those support and resistance zones, we can draw our levels clearly on the chart. Now, in this specific example, the structure forms a rectangle pattern. But again, the important thing is not the name rectangle. The important thing is understanding the consolidation happening inside those levels and preparing yourself for the breakout that may follow. Because once you start focusing on the real mechanics behind these setups, instead of memorizing random pattern names, your chart reading becomes much sharper. Stick with me through this video because I'm going to show you exactly how to use this understanding to massively improve your breakout trading strategy. So far, everything sounds simple, right? You identify the consolidation, you draw your support line, you mark your resistance line, you wait patiently for the breakout. And honestly, up to this point, most traders feel extremely confident because the setup looks clean, the chart looks obvious, everything feels like it's about to explode. But this is the exact moment where so many traders make a massive mistake. And this mistake destroys more breakout traders than almost anything else. Here's what usually happens. A trader watches the market consolidating between support and resistance. Price keeps bouncing around inside the range. Pressure keeps building. And then finally, the breakout happens. Price suddenly pushes through resistance. A massive bullish candle appears. Momentum starts accelerating. And the trader instantly thinks, this is the move. This breakout is real. If I don't enter right now, I'm going to miss the entire opportunity. So they panic by the breakout candle immediately. No confirmation, no patience, no deeper analysis, just pure emotion. And for a few seconds, the adrenaline kicks in, the trader gets excited, they start imagining the huge move that's about to happen next. But then something terrifying happens. The breakout suddenly slows down, momentum disappears. The candle starts rejecting, and out of nowhere, price violently reverses in the opposite direction. The market drops right back below resistance. That perfect breakout completely fails. And now the trader is trapped inside a false breakout. One of the most frustrating experiences in trading, because not only does the trade fail, it fails right after giving you confidence. That's what makes false breakouts so dangerous. They trick traders emotionally. They lure people into the market at the worst possible moment. And this happens way more often than most beginners realize. In fact, this exact situation is one of the biggest reasons traders struggle with consistency. They keep buying fake breakouts, they keep getting trapped, they keep watching price reverse immediately after entry, and after enough losses, they start questioning everything. Their strategy, their timing, their confidence, their entire understanding of the market. So naturally they ask, what am I doing wrong? How do professional traders avoid this? How do some traders seem to enter the real breakout while everyone else gets trapped? Well, here's the good news. There are specific ways to dramatically reduce your chances of getting caught in these fake breakout traps. There are clues on the chart. There are warning signs hidden inside the price action. And once you understand what to look for, everything starts changing. The very first concept you need to master before trading breakouts is something called momentum candles. Momentum candles are one of the clearest signs that buyers or sellers are aggressively taking control of the market during a breakout. These candles tell you something very important. This move has real strength behind it. Now pay close attention, because there are two major types of momentum candles you absolutely need to recognize on sight. The first type is the easiest one to spot. It's a single large candle with a strong, full body, big body, strong close, very little hesitation. That candle is basically the market screaming, buyers are in control or sellers are in control. It's explosive, it's aggressive, and it usually appears right when price starts breaking out with serious force. Now the second type looks different, but it can be just as powerful. Instead of one huge candle, you get three medium-sized candles moving consistently in the same direction, one after another, step by step, push, push, push. That steady pressure is extremely important because it shows sustained momentum entering the market, not random movement, real directional strength. And these are exactly the types of candles we want to see when confirming a breakout setup. Because a breakout without momentum, very dangerous. A lot of fake breakouts happen with weak candles, tiny bodies, and no real pressure behind the move. But when momentum candles appear, now the breakout starts becoming high probability. Now the move has energy. Now the market starts showing commitment. And this right here can massively improve your timing, your entries, and your overall win rate as a trader. So in the next part, I'm going to show you exactly what these momentum candles look like directly on the chart, and more importantly, how to use them to your advantage like a professional trader. Now, let's look at a real example on the chart, because this is where most traders get trapped. Take a close look at this setup. Price has been forming a series of higher highs, which immediately tells us the market has bullish pressure building underneath. So what do? We identify the resistance level at the top. Very clear, very obvious. Price has reacted there multiple times. And at the same time, we can also identify a strong support level below because price keeps bouncing from that area again and again. So now the market is trapped inside this range, and all we do next is wait. No guessing, no emotional entries, no FOMO. We wait for the breakout, then boom, Suddenly, a decent-sized bullish candle appears and pushes above the resistance level. Now, this is exactly where beginner traders usually lose money, because the moment they see the candle touching above resistance, they instantly scream, "Breakout! Buy! The market is going to the moon!" But hold on, slow down and look carefully at the candle. Yes, the candle broke above resistance, but only the tip of the candle. The majority of the candle body is still trapped below the resistance line. And that matters a lot, because in this strategy, that is not a valid momentum candle. A true momentum candle must show real force, real commitment. We want to see most of the candle body breaking through resistance, not just a tiny wick poking above the level. That little wick alone means nothing. Price can fake that move very easily. And there's another important rule here. Even if the first candle is not strong enough, we can still accept the breakout if another bullish candle forms completely outside the resistance area. That second candle would confirm that buyers are truly taking control. But what happens here? The next candle turns red, instant weakness, instant rejection. And right there, the market exposes the trap. That's why we completely ignore this breakout signal. No entry, no emotional reaction, no chasing price. And look what happens next. Exactly as expected, the market reverses. The breakout completely fails, false breakout. This right here is why patience is one of the deadliest weapons in trading, because weak breakouts destroy impatient traders every single day. But when you train yourself to wait for real momentum candles, real confirmation, and real breakout pressure, you immediately filter out a huge amount of bad trades, and that alone can completely change your win rate. Now let's go deeper, because the next examples are going to show you exactly how professional traders avoid these traps and only attack the highest probability breakout setups. All right, now let me show you another breakout example, because this is where traders either become disciplined professionals or emotional gamblers. Take a look at this chart carefully. We already have our support and resistance levels mapped out clearly. Everything is prepared, everything is clean. Now we just wait for the market to reveal its intention. Then price starts moving. Boom. A bullish candle pushes through the resistance level. Now, most beginner traders would instantly jump into the trade right here. They see price above resistance and think that's it. The breakout already happened, but not us, not anymore. Because we understand something most traders completely ignore. A breakout without momentum is dangerous. And this candle, it's not strong enough. Yes, it broke resistance, but the candle body still isn't large enough to qualify as a true momentum candle. There's not enough force behind the move. So what do? We wait. No chasing, no panic buying, no emotional entry. Then the second candle forms, and once again, it's still relatively small, still weak, still not enough momentum. So again, we wait. This is the part that destroys impatient traders, because trading is not about reacting fast. It's about reacting correctly. And remember the rule we established earlier. We only want one of two things. Either a large momentum candle with a powerful body breaking through resistance, or a sequence of 3 consecutive bullish candles showing sustained buying pressure. That's the confirmation. That's the real breakout pressure. So we stay patient, and then finally, boo, the third bullish candle appears. Now this is what we've been waiting for. 3 green candles, consistent pressure. Buyers pushing higher again and again and again. That's not random movement anymore. That's momentum. That's commitment. That's where the breakout starts becoming high probability. And this is where we finally decide to enter the trade. Now, from this point forward, there are 3 possible outcomes, and you need to understand all 3 like a professional trader. Scenario number 1, price keeps exploding upward immediately. No pullback, no hesitation, just straight momentum. Beautiful. Scenario number 2, price pulls back slightly and retests the resistance level before continuing higher. And honestly, this is very common because many strong breakouts retest the breakout zone before continuing the move. Then scenario number 3, the worst case scenario, price falls back below resistance. And if that happens, the breakout was fake, a false breakout, trap. And this is where strategy becomes everything, because now the question becomes, should you enter immediately after confirmation, or should you wait for a pullback retest before entering? Which one gives the better probability? Which one gives the smaller risk? Which one gives the bigger reward? All right, this is where trading starts getting really interesting, because what I'm about to show you right now is the exact mindset shift that separates random traders from traders who actually survive long term in this market. Here's what I personally love to do. I don't sit there frozen waiting forever for the perfect pullback. I build a strategy that already puts the odds massively in my favor before the market even makes its next move. And this is exactly how. The moment the momentum candle closes, I enter the trade immediately. Right there, no hesitation, no chasing later, no emotional panic entry after the move already explodes. I get in early, but I do it with controlled risk. And this part right here is critical. The stop loss goes just below the resistance level, right below it. Why? Because if the market decides to pull back first, retest the resistance and then continue exploding upward, which happens all the time, my trade is still safe. My stop loss survives the retest. And that means I still stay inside the move while everybody else gets shaken out emotionally. But on the other hand, if price doesn't pull back, if it just keeps climbing immediately, boom, I'm already inside the trade from the very beginning, catching the entire breakout move while late traders are still waiting for confirmation. This is why momentum candles are so powerful. Because once a real momentum candle appears, a candle with genuine strength, genuine pressure, genuine commitment from buyers, the probability of a false breakout drops dramatically. Not impossible, but much lower. And that is why we trust the setup. Now, of course, no setup is perfect. Sometimes the market still reverses, sometimes the breakout fails, sometimes price drops right back below resistance. But that's exactly why the stop loss exists, not to make you afraid, but to protect your capital while giving your winners room to run. That's the entire game. Small controlled risk with massive upside potential. And now that we've locked in our entry point, the next step becomes incredibly important. How do we exit the trade correctly? Because entering is only half the battle. So now, let's move into the next part and break down the exit strategy that helps maximize the full potential of moves like this. When it comes to breakout trades, this is where the real money is made. Because the biggest mistake traders make, they treat a breakout like a normal trade and they kill the position way too early. Think about it. If we only use a standard 1.5 risk to reward ratio on explosive breakout moves, we're literally walking away from massive profits. We're leaving money sitting on the chart, and on strong breakouts, that missed move can be huge. So instead of cashing out everything too early, I use something called the two-step take profit system, and this changes everything. Here's exactly how it works. The moment we get our entry signal, we place our stop loss right below the resistance line. Simple, clean, protected. Then we set our first take profit target at the 1.5 risk to reward level. Now pay attention here because this is the important part. The second price hits that first target, we immediately sell half of the position. Not all of it, only half. Why? Because now we've locked in guaranteed profit. The trade already paid us, we already won, but the other half, that stays in the market. And this is where the breakout can go absolutely crazy. Now we move our stop loss up to the previous take profit level. So at this point, the trade becomes extremely powerful because our profits are protected while the remaining position still has room to run higher. And from there, we use one specific indicator to guide the rest of the trade, the chandelier indicator. To make this super easy for you guys, I already put the chandelier indicator down in the description below this video. I also included all the exact settings I'm using in this tutorial, so you can literally just download it, apply it to your platform, and follow along immediately. Now here's how the exit works. After taking profit on the first half at the 1.5 ratio, we simply let the remaining position keep running. We stay in the move, we let the breakout bleed. Meanwhile, our stop loss is already protecting the gains we locked in earlier. Then we exit the rest of the trade only when the chandelier indicator changes color. That's it. So in this example right here, we would have sold the remaining half exactly at the indicator signal. And look at the difference, and look at how much extra profit we captured just by holding on to half the position longer. If we had closed the entire trade at the 1.5 target, all of that additional upside would have been completely missed. Gone. And this is exactly why breakout trading can become insanely profitable when you manage the trade correctly. You can also notice something really important here. Price didn't pull back. It just exploded straight upward. No hesitation, no retracement. Just pure momentum. And that is why I prefer entering breakout trades immediately, because many breakouts don't give you a second chance. Once they move, they move. They launch aggressively in one direction and never look back. So by using this strategy, we're doing two things at the same time. First, we secure profits early. Second, we still give ourselves the opportunity to catch those monster breakout moves when the market goes parabolic. And that combination is what maximizes both profit and trading efficiency. All right, let's go through one final example, because this is where everything comes together. First, we identify several key areas on the chart that are acting as major support and resistance levels. These zones are critical. They tell us exactly where price has been reacting before. Once those trend lines are mapped out, we wait, and this part matters a lot. We do not jump into the trade emotionally. We wait patiently for momentum to show itself. Then suddenly, boom, a candle breaks above the resistance line. But hold on, even though the breakout happened, the candle body still isn't large enough to give us maximum confidence. So instead of forcing the entry, we stay disciplined and wait for more confirmation. Then we get two more strong green candles. Now we have 3 green candles pushing upward with momentum, and that is our signal. At that moment, we confidently enter the trade. Next, we immediately place our stop loss just below the resistance line. That way, if the breakout suddenly fails or reverses, we're protected instantly. Then we set our first take profit target at a 1.5 risk to reward ratio. And now we wait for the market to do its thing. Price keeps climbing and eventually it reaches our target. The second that happens, we sell half of the position. Why? Because we want to secure profits immediately. We lock in gains while the trade is still moving in our favor. Then after taking profit on the first half, we move our stop loss, which means at this point, our gains are protected. Now the trade becomes extremely powerful because we've already secured money, but we still have another half of the position running. And this is where the chandelier indicator comes in. We activate the chandelier indicator and let it guide the rest of the trade for us. Instead of exiting too early, we stay in the move. We allow the breakout to continue running as long as momentum remains strong, and we only exit when the chandelier indicator changes color and signals a possible trend reversal. The moment that color changes, we close the remaining half of the position. Done. Trade complete. And look at what just happened. We captured extra profits that most traders completely miss because they panic and exit way too early. That extra move right there, that's the difference between average traders and traders who fully maximize breakout momentum. Now, in this video, I showed you some incredibly valuable secrets that can seriously improve your breakout trading strategy. So if this helped you even a little bit, take literally 2 seconds and smash the like button because it genuinely helps support the channel and allows me to keep making videos like this for you guys. And if you want part 2, where I'll show you even more ways to maximize the profitability of this strategy, then you need to watch the next video. Trust me, it gets even crazier. Thanks for watching, and I'll see you guys in the next one.